Welcome to Within the Frame, where we bring the most pressing issues across the globe into focus. I'm Kim Mok-yeon. The South Korean government is making one of its biggest bets yet on stabilizing the economy. It has unveiled a sweeping overhaul of the property tax system, shifting the focus from the number of homes people own to property value and owner occupancy. Yet, uncertainty remains, with financial markets continuing to experience sharp swings despite today's rebound. So how effective are these latest measures likely to be, and what more will it take to restore confidence in Korea's economy? For more on this, we are joined in the studio by Yang Jun, Professor of Economics at the Catholic University of Korea. Very big welcome.
Happy to be here.
And also joining us online is William Brown, former member of Board of Directors at Korea Economic Institute of America and Principal of Northeast Asia Economics and Intelligence Advisory. Good to see you.
Oh, nice to meet you, Young.
So let's start a discussion first with the government's latest housing measures, Professor Yang. So like I've said, the new reform, it shifts from the number of homes owned to property value and whether you're living on the house or not. What is your overall take on this?
Okay, well, if you look at this as a housing policy, there's a crucial piece missing, which is what to do with the supply. And one of the worrying aspects is that during the town meeting that the president had a couple of weeks ago, he seemed to imply that supply was not important, which goes against, I think, the advice of most analysts and academics who look at the housing market. But there was a report today that the government will announce some supply projects and plans in the near future. So until we see that, I don't think we can make a comprehensive evaluation of this current real estate policy. But now, if you look at the real estate policy that were announced yesterday and today, those mostly deal with taxes because, well, the announcement was mostly about taxes, tax policies, and government expenditure. And if you look at real estate taxes, there's three major branches in Korea: property taxes, comprehensive real estate tax, which is sort of an additional property tax, and then transaction tax. Now, OECD made recommendation in the last Korea report saying that Korea's property tax rates were perhaps too low. It's way below OECD average. But if you take all the real estate related taxes, all three of these taxes, then Korea has one of the largest taxes in the OECD. So they recommended a rebalancing, raise the property tax rates and perhaps lower the transaction tax rates. But the current policy perhaps only deals with raising the property tax part, especially where it goes into comprehensive real estate tax. Now, the government bases this on argument of fairness. So instead of basing taxes on how many housing units you have, they look at the value of housing units, and especially for the comprehensive real estate tax, if you have a very expensive housing, over 4.5 billion won, then your tax rate is going to go up a lot. And then transaction taxes, they rearranged the standard so that right now it depended on how, again, how many units of housing that you had, but now it's balanced toward how many years did you live in the house, and exemption standards are going to be based on how long you lived in the house rather than how many units you have. So they argue that this is going to be more fair. It's going to be more perhaps progressive. Now, will this bring down the price of housing? I have my doubts. Because overall taxes seem to have gone up. And when the Moon administration had their policies where they raised both property taxes and transaction taxes, it didn't really do much to lower the price of housing. So we'll have to look at the supply side to make a comprehensive evaluation. But right now, just based on what's been announced so far, it seems like the government is more interested in raising tax revenues and making the tax system more progressive rather than bringing down the price of housing.
So if we get deeper into the reforms itself, you've mentioned that the government is encouraging owner occupancy while also raising taxes on high value and non-owner occupied houses. Then how do you think this would actually change the behavior of homeowners in Korea?
Okay, well, you have to look beyond just the housing market because for most Koreans, the housing unit is the biggest investment that they'll make. And because it forms so much of their investment, they look at the housing value to tide them over after retirement. So if you wanted to have a real reform in this area, you not only have to have housing reform, but you also have to have investment reform. You want to divert some of the money that is currently going into the housing market to other investment markets. I think at the beginning of the year, because the stock market was doing so well, that government wanted to redirect some of this money to the stock market. But in some sense, they've been unlucky or maybe too lucky because the stock market has gone beyond everybody's imaginations and perhaps even been caught in a price bubble. Right now, you actually don't want more money going into the stock market. So in that sense, I think the government has been very unlucky. But if you wanted to make the Korean asset investment system more rational, then you need to have some less money going into the housing market, and you need more money going into alternate investment market. But right now, it doesn't seem to be working that way. Since the stock market is sort of in peril right now, the money may go back into the housing market.
Right, so this general perception of us about housing, it's still unchanged. Now, what about Mr. Brown? From an international perspective, how does Korea's new property tax overhaul compare with approaches taken in other advanced economies?
Yeah, I think Professor Yang hit it on the nail there. The OECD report kind of shows that Korea's attitude toward housing has mostly been on transactions, buying and selling a house, and not on the value of the house, the long-term property. So like here in America, our main tax on housing is the property tax, which is not a transaction. It doesn't matter if you buy and sell, it's every year how much you pay. And that's sort of carefully evaluated at a local level. I think the biggest issue in Korea is Korean economy is very highly centralized. Most countries, certainly America, is much more decentralized, so that we don't have sort of huge, big policy measures on housing. It's usually a county that we're worried about. The county raises the tax or lowers it. And so it's the centralized nature of Korea that has a lot of advantages, fairness advantages, I would say. In America, there are widely different tax policies on housing. Korea is kind of uniform. So that's an advantage, I guess, for fairness. But the centralized nature of it makes it, I don't know how many times Korea has tried to adjust the housing policy. It seems like every year there's something going on here. And overall, it's been a success. Korean housing is much better than it used to be, certainly. But it's so incredibly, in my view, the supply issues are important, but the demand side is so concentrated in certain areas, even within Seoul, certain areas of Seoul, not all of Seoul, but more importantly, over the whole country. More and more, I travel in Korea and in southern Korea, all over. There's weakness in the housing market. There's plenty of land. There's plenty of great places to live. And yet, it's just kind of anomaly. Everybody likes to live in a 30-story apartment building. I think it's just different culture in a way. Everybody jams together, and that pushes up the price of these huge apartment buildings. So it's a different culture in a way, but it's also, I think the policy should be a little bit less soul-oriented and try to develop housing, and not such big housing, more smaller more units in other parts of the country. That would help, I think. Right. Let me just give you one example, though. So I lived in Korea for about 25 years, and we had 5 different houses, I think, about that. I go back now, every one of them is gone. Everyone is gone. I've lived in America about 45 years or so, and I've lived in maybe 10 different places. Everyone except the very first one is still there. So the change in Korea is just phenomenal over a period of, my lifetime. Constant churning, building and tearing down, building and tearing down. That's a function of the development of the country, and it's not a complaint. But that sort of needs to calm down, and I think Korea needs a little bit more stability in the housing industry, and that's the supply and the demand side.
Right, definitely. A very important point that you've made. Then, Mr. Brown, do you think the latest announced reforms are likely to stabilize the housing market?
I think they are kind of in the right direction, moving a little bit away from the transactions penalty and more toward the value of the property. If the value of the property can appropriately be analyzed, assessed by the government. And that can be a hard thing to do, because who is going to assess the value of the property? That's a problem in America and in Europe, I'm sure. So it's not a panacea, but it's probably is moving in the right direction. Nobody likes to see empty housing. I mean, that's just like loss of productivity of that capital investment. In Korea and in some American cities, there's a lot of empty housing, which is, I think from an economist's perspective, just very unproductive. So you do like to have filled up housing. The idea, though, that, one person can't own 5 houses, it's so contrary to what we think, I think. That's kind of none of the government's business, how many houses you own. It is the government's business, the tax authority's business, of how much is valued at. Mm-hmm. And I think my last point, my concern, I think they're moving in the right direction, but there seems to be so many little gimmicks to it, So if you can't have 5 houses, what if you give a house to your son or somebody else or whatever? So I think there's a lot of gimmickry here that people can lose confidence in the tax system, and that would be really too bad for that to happen.
Mm-hmm. Thank you for pointing out the pros and cons of the current situation, Mr. Brown. Now, let's turn to the stock market. Professor Yang, you've mentioned it's quite volatile a while ago as we talked, and it now has rebounded after another roller coaster session. What do you think is driving these very sharp swings?
Okay, well, before the stock market dropped, I think you could divide the analysts into 2 different camps. One is Korea finally is catching up to the true value of Korean companies. Korea discount has disappeared, and the current stock market rise reflects realistic expectations of what AI profitability is going to be in the future. Other camp, which frankly I belong to, is that at least some of the rapid increase in stock prices were a bubble, and the bubble basically popped. Now, what's driving the volatility? Well, first of all, if you have a bubble-based rise in stock market, the rise is going to be quick, and then fall is going to be even faster. So that's the first element, because bubbles basically depend on psychology, and psychology changes. people's expectations, people's hopes suddenly turn into despair. So that is probably the basic reason if the current stock market did have a substantial bubble. And then adding to it is a lot of people borrowing money and making investment using margins. So that expands the volatility. And then the so-called single firm leverage ETF, which use derivatives to increase the returns or losses by factor of 2. That also increases the volatility. Though they certainly played a role in volatility, but I'm not sure if those single firm ETFs, leverage ETF did not exist. I'm not sure if the volatility would have been stable. And that's because you can always buy these single firm leveraged ETF in markets like Hong Kong. So you could go abroad and buy the same items, which would have the same effect in terms of volatility. And then last, I don't want to overemphasize this factor, but I think foreigners do have some element to play. They started the investment in semiconductor companies last year because, well, they saw that the semiconductor demand was increasing and the price was increasing. Then they left for most of this year, and then they came back last week, and the market started rising again. So they may not be contributing to the bubble itself, but because perhaps the other people are acting either for or against foreign investment, they might be contributing somewhat to the volatility as well.
Mm-hmm. Then, Professor, if it's kind of a bubble that we're seeing, then do you think this situation, this uncertainty would go on for a while?
Well, at the beginning of last week, I was kind of hoping that the bubble popped so we would go back into a more stable and rational stock market. But then at the end of last week, we had minus 10% and plus 18% changes. So I'm a bit concerned that maybe the volatility hasn't gone away completely. But today, the market, I believe, rose by 1.6%. So I was just telling this to somebody else, but well, okay, so it reduced to 1.6% today. So volatility may be settling down. But then I remember some of my old stock market history. Usually the variability, stock market changes go between minus 1% to plus 1%. And today was plus 1.6%. So if we were, say, looking at the market 2 years ago, this would have been a huge change. But now we've been so used to 5%, 10% changes that 1.6%, even though it's outside the usual range, seems stable.
Mm-hmm. Right. So quite a lot of uncertainty that we're seeing right now. Right. But despite this kind of volatility that we've been seeing for the past few weeks, Goldman Sachs and Morgan Stanley remain quite optimistic about Korea's semiconductor sector and the stock market as well. Mr. Brown, what do you think they're seeing that investors aren't?
Yeah, it's actually, again, what Professor Yang is talking about. What has long been thought of as this Korea discount. Yeah, it's usually, I've thought of it for bonds more than stocks, actually, but recently it's been applied to stocks. And the idea is from the rest of the world, but inside Korea as well, and maybe most importantly, inside Korea. Koreans and other investors are a little bit skeptical of the Korean economy. And so they reduce the value of Korean shares compared to what they would be in another country, in an OECD country. And so there's always this idea that there's a Korea discount. And you can measure it. My colleague at KEI, Randall Jones, has a great article, June 22nd, you might look at it. And also a fellow named Evan Ramstad at CSIS, excellent articles on this Korea discount. And their argument is very much like what we're seeing from I think Morgan Stanley and others are saying, you know, what we're seeing here is sort of a catch-up. that Korean stock values are rising to kind of to where they should be from very low levels historically. And therefore, they're more optimistic in the future that it can come out of this turmoil, certainly turmoil now in the ups and downs, and they can get rid of this discount. But I would further say, though, that there's some elements in the, I study Asian capital markets a fair amount, and I'm thinking, there's, in Korea, we have these tendencies for financial panics, ups and downs. It's not at all unique to Korea. Everybody throughout all of history have had these panics and ups and downs. It's basically, to me, there's a huge issue of momentum here. You can call it bubble. It could be a bubble. Economists will talk about a bubble. I'll talk about a bubble. I always say economists, we do okay financially, but we don't get rich. Why don't we get rich? Financial people get rich. Why don't we get rich? Well, we follow the idea of the scissors effect. If the price goes up, what do we want to do? Sell. High price, sell it, right? So if the price goes up, I'm going to want to sell it. If it goes down, I want to buy it. That's the wonderful balancing aspect of the market economy. But a financial guy, and I must admit, it's hard not to be a financial guy. When it goes up, I want to buy. I see it going up, right? Oh, it's going up. No, I say, no, it's gone up. Sell. The market guy will say it's going up, so buy. But that that momentum, it's always been there. And even me, I see this market this morning up. Oh, maybe I'll buy some. It's going up. That causes this bubble to happen, and eventually the price gets too high. That's what I call the greed. People call the greed thing. It's going up. I buy more. Something happens. Interest rates rise. Some big company fails or something. The price goes down. Then everything is in reverse. And like you say, then you say it's a panic, Oh, it's going down. It's going down. No, it went down. It's going down, better sell. And so when you sell, it just pushes this thing down. It's like a wave. It's very much like a wave. And you get these cycles. It's very hard to stop that. And because it's psychology,
Right.
And the price and the panic element is much stronger than the greed element. So it falls faster than it rises. And that's what we're seeing in Korea, this ups and down.
Right,
It's
definitely.
volatile, no doubt. Yeah.
So
and it's hard to
Mr. Brown, thank you so much for giving us a clear picture of what many of us are feeling every day and every night these days. But let's hope the situation stabilizes as soon as possible. But we'll have to leave our discussion here tonight. Thank you so much for your time and for your insights, Mr. Brown.
I appreciate a chance to talk to you all.
And of course, Professor Yang, we really appreciate it.
Thank you.
And that'll be all from us on Within the Frame tonight. Be sure to tune in again next time as we continue to explore the stories that matter. Till then, stay informed and engaged.